How to get approved for a home loan with low income. I get this question all of the time. Are you ready to buy a home, but you're not sure you make enough money to qualify? Well, that can be really tricky, and sometimes it can be a big obstacle if you don't know what to do. But I'm here to show you, and I'm going to tell you exactly how you get it done. Let's go. So the mortgage loan application process can be very daunting for people. When you go to apply for a mortgage, the first thing that they have you do is complete an application. This application is called by us in the business a 1003, which is basically the name of the form for Fannie Mae. And usually it's a 4 to 6 page application that asks you pretty much everything about the home that you're buying, the interest rate, your employment, your name, your social security, how old you are, how many dependents you have, what your assets are, and it lists out all of the debts that are showing on your credit report, okay? And this process can be very daunting for people because it is a long application. It's not like a quick one-pager. And so many people get really tripped up in the mortgage application process, but it does not have to be daunting. The mortgage application process is really just finding out what your current situation is and looking at if you qualify and if you are able to repay that mortgage. Most lenders really just want to know, are you able to repay the loan? Because they have millions of dollars set aside for mortgage loans, but they want to make sure that mortgage is repaid because they make a ton of money off mortgage loans. So I'm going to tell you how you get through the process. The first thing that you want to do before you ever apply for any mortgage is know what your debt ratio is and know what your credit score is. So the way that you do this is you should pull your own credit. I literally give you a link in the description box for a link for the 𝗏𝗏𝗏, okay? This is a website that will allow you to pull and check your credit so that you can see all of the debts that are up there and you can see your credit score. Additionally, it gives you different models so that you can see different credit scores because the credit score that mortgage lenders use is different than the one that other people use, okay? So like if you're applying for an auto loan, that score is different and those lenders are different than mortgage lenders. So you want to be really specific and get the credit report and the credit score that mortgage lenders are looking at. And so go ahead and pull your credit, go to 𝗏𝗏𝗏𝗏. I do not recommend, some of the other sites. I know you can get my annual report for free or you can go to Credit Karma. I've worked in mortgages for over 15 years and I'm telling you, there is a difference between the credit report that they use. They literally have their own credit report called a mortgage credit report. And that credit report is different, okay? It's actually called a RM, a residential mortgage credit report. And so you want to make sure that you are looking at that correct report with that correct FICO score modeling. The next thing, once you pull the credit and you see the score, go ahead and look at your debts. All of the debts that are on your credit report are the debts that they are going to use on your mortgage credit application. So go ahead and add up the credit cards or the auto loans or the other student loans or whatever is currently showing on your credit report and add up the monthly payments and divide that by your income so that you have your debt ratio. Okay, some companies call it your debt to income ratio or your DTI. You need to know this and you can get all of this just by pulling your own credit report. But if you are applying for credit and we're talking about getting a home loan with low income, you're gonna run into a little bit of an obstacle that you wouldn't necessarily have if you have a higher income. But if you have now looked through your debts and you see, okay, you have $1,000 a month in debts and maybe you only make $1,500 per month gross, okay? That's another thing. Lenders will use your gross income, all right? So just give you a quick example when you're figuring out your debt to income ratio, make sure you know what your income is per month, your gross monthly income. So if you make $10 per hour and you work 40 hours per week, that's $400 per week. You work, 4 weeks out of the month or 4.3 weeks out of the month. If you make $400 per week, multiply that by 52 weeks and then divide by 12. And that will give you your gross monthly income. Then you divide that number by the debts that you had on your credit report and you will have your debt to income ratio. Now, that is how you come up with it, and that's the same thing that lenders are going to use. So if you find that you don't have enough income, let me tell you a secret on how to get approved a different way. A better way that I learned after failing in real estate and losing my properties and going through foreclosure and ending up in my parents' basement to now being a millionaire that owns lots of properties and makes tons of money in real estate, I figured out a better way, and I'm going to share that with you. You can just skip the mortgage process altogether, guys. Yes, you will probably get a mortgage eventually, but you do not really need to focus that much on home loans and getting approved for a home loan if you want to start making money in real estate and you want to start acquiring properties. A faster, better way that I'm going to teach you is to start to find people that already have a property, that already have a mortgage, and they are behind on that mortgage payment. Those people are losing their home to foreclosure, and in many cases, you can help them avoid foreclosure by marketing to them, catching up those payments, and then taking over that mortgage. It's a system that we call TOPS, or taking over mortgage payments, or taking over payment system. There's all different types of names, but it basically means that you are purchasing the home subject to. Okay, you can either do a subject to where you purchase the home and they leave that mortgage in place. The money that you put down will catch the mortgage payment up, and then you can take over those mortgage payments. That way you never had to have your credit checked. You never had to have your credit pulled. No one is looking at your credit ratio. You just need to make sure that you can afford to take over those mortgage payments, okay? And that you can show the seller that you're able to do that. Or you could even lease the property. Again, they're behind on the mortgage payment. You make those payments that they're behind. You make that the security deposit to catch the mortgage up. And then the mortgage payments are now your lease payment, and you did a lease to buy that property. So there's tons of ways where you can start getting property and you never have to have your credit pulled. You never have to show anyone your income, and you never have to go through that daunting mortgage process. And this is probably a better way if you have low income or income that you have that's not reporting, or maybe you got paid in cash, or you didn't file your taxes and you wrote a bunch of things off. So on paper, it doesn't look like you made a lot of money, but you want to start getting some properties. This is a faster, better way to do it. Just target people that are already in foreclosure or bankruptcy. If you want full training on this, I've created an entire free training. Please just go to noellsfreetraining.com to get the full training on how to find people with property problems, how to target them, what to say, how to find those people for free, and how to put deals together where you are making tons of money and you are acquiring properties that are making you money and growing your wealth. Please go ahead also and like this video, subscribe to my channel, and I'll see you next time. This is Noelle, to your success.